Good morning, guys. It's Simon with Trade and Perform Coaching. It's 8:09 a.m. on the 19th of June, Monday morning in a rainy Plano, Texas. Legal notices, important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on the channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, we got past the joyful part. Hold on one second. I need to get my own trading domes going real quick. Started. There it goes. Okay, and then do that here. Hold on one second here. Okay. So we are in business. And I have my one more thing. I have to hit my password on my trading domes. And they're up and running. Okay, so a couple of things. First of all, I want to go through the feedback. Hey James, good morning. The feedback that I got from this weekend. A couple of things, okay? Number one thing on my goal for the week, right, is whether this market gaps up and goes and gives me a trade or doesn't give me a trade, my focus is number one on process, right? Number two, if I miss one trade, there's always another trade coming up. Number three, we're trading ES primarily, and ES has a tendency to go up. If I'm a balanced trader and I'm very neutral energy-wise and I have the capital to do it, I can trade both sides of the market. But if I can only trade one side, I want to put my focus on the long side trades. The extension's easier there. It comes down to that, right? In terms of when we get to a support resistance zone, there won't be any caution on this zone or anything like that. It's a support resistance zone. Everyone knows where the stop is, right? There's nothing this morning in terms of futures rollover or options rollover that would cause additional volatility. We just want to watch the dome and make sure it stays healthy, which pre-market, it looks just fine, right? So let's go. We haven't done this in a little while, so let's stick to discipline and grab our and we will grab our checklist pre-market. Okay, so pretty much have this memorized, but let's just go down the list real quick this morning since we're starting the week. Have we had an increase or decrease in the overnight rotation? We have not, right? We're going from 32 to 40. It's 8 points. That's a little bit less than what we had on Thursday and Friday. It's a slight decrease, but I call it equal. Are we opening above, below, or inside prior day's range? We're clearly opening above prior day's range at 24.40, right? And this pretty much puts us up right into that 43 all-time high, right? So a couple of things. First of all, as we get up into this area, right, weak hands are going to, okay, so I always try to think, what do I think of as when I'm a weak trader versus a strong trader, scalpers versus not scalpers. So remember, all day time frame traders are the weak hands. We are by definition the weak hands because we have the tightest stops, right? And we're the most finicky in terms of letting the market rotate. We're not going to let it rotate down 20 even if we think it's going to go to a new high by the end of the week. we're not going to sit through. So we are by definition weak hands. Within that subcategory, right, are going to be people who try to either fade this area or buy right out of the gate. So how do we figure what's going to be our clues? Well, first of all, we're going to look to tick. Tick has not opened plus 800 for the last couple of weeks, and what we've had is resulting roll downs or push downs out of the gate, even on gap ups, right? When the tick has not been plus 800, we've had these push-ins consistently, right? Inevitably, someone's been making money, right, the last 3 days trying to push these down. You've really had good pushes to the downside pretty consistently on almost every open, right, ever since the 9th. Okay, so I want to make sure everyone sees that. Since the 9th, people who have been looking for short location have been getting paid, right? Traders naturally try to press this advantage over and over again, okay? And what is natural is that eventually there'll be a shift, and those same traders that are pressing that short side trade are going to get caught out sooner or later. So I don't want to be in the group that's going to be caught out. So I don't know that today's the day that'll end, but if we open plus 800, and we fail to fill. So what will be our clue, right? Each of these days filled in relatively quickly, right? So what I'm going to be looking for is, assuming the NYSE tick is plus 800, is some variation on while the tick, let me fix the color of the pen, and let me relax a little bit. I'm too intense. Too intense for Monday morning. So the tick's coming in like this, right? We start plus 800, we're heading towards 0, right? As that's happening, the price bars on the S&P 500 are either going up, or they're going sideways, or they're really it's one of these two. Either they're pushing up while tick is pushing down, or we're trading completely sideways. Now there's a third variation where it pushes down and then just rolls right back up, and we may get that, but this is the least desirable of these three patterns when we're coming in for a zero tick trade for a push to the long side, right? So since we're gapping up, we're going to ask, are we able to attain half gap? Are we able to attain half gap, gap fill, right? Are we able to attain, are we able to get any downside rotation? Is the first 5-minute bar red or green? And are we holding above or below the first 5-minute bar, right? Those are all going to be critical questions you want to ask, particularly since we know these guys are going to come back in and probably attempt to press to the downside. If we have a first 5-minute candle, and this is the opening print, right? Can they get, when they push in, can they get below or hold below that first 5-minute print? Because if they can't, those guys are going to be forced to come in, adding to fuel to the upside, right? When we go over, and again, the focus is primarily on ES, right? So there's two ways to handle this, right? If you trade in the first half hour, I'm not a big fan of shorting the first half hour, but if you are, right, first make a decision on how aggressive you're going to be. Number two, what's your stop going to be in this location? Number three, if you are going to press down outside of the zero tick, what's above you to stop you? So let's go look at where the volume and the time is hiding, right? So first, let's go look at the volume profile. So this is price by volume only. Has no thought process on time. When we look at ES.D, by the way, I rolled over, I think we're on the Q contract on CL if you're trading CL. Okay, so this is the one area right here. And there's a NVPOC right there at 35. Now, that's below us, right? That was our point of resistance last night. If you look where we opened last night, so if you look yesterday in the evening, this is our open. Here's 35, 34, close enough for hand grenades, right? Let's just do a zone right there, 34, 36, right? Which is essentially the zone we have there. Okay, so you see we opened up right into resistance, traded sideways, then in early Asia grinded through, right? So here's 35 right in the middle of all that, right? Pushed up, got above the NVPOC, right? Backside tested, and now we've pushed up to the upside. So the first thing this tells me is, first of all, this first push into 36.34, if I'm on the furthest edge of aggressive, meaning I'm okay trading in the first half hour, I'm okay taking the stop, I'll continue with my process through the day, right? That's the first place I want to take a long, right? I can see that on multiple days, and particularly before this rollover on Friday, you can see the support resistance in that same area. And you can see we also pushed in for support on the backside test before failing and backside testing back on Wednesday. This is Thursday. So you'll see early Asia, Thursday we pushed in, rejected, right? And then you can see Friday we pushed in overnight and rejected out and closed back into that area late in the day on Friday afternoon. So it would only be natural when we get to the backside test of this location to find responsive buyers in this area, hopefully for a push of this sort. So my plan, which is aggressive, is to take that 36-34 area to the long side this morning if they'll give me an opportunity early in the day. That's where I want to take the trade to the long side. And then what am I targeting? So if I pull this down, right, and I look to the left, first, from a volume standpoint, there's nothing behind here. We have this little clip, which we're holding this up right here, a volume, this little tuft at 41. And you can see we've stopped just in front, right where that LVN is at the top, but that's a weak top, in my opinion, right? And then the other thing to note is if we get below that 36.34, our support's all the way back at 27. Okay, so it's not an automatic that it'll hold. It's just a good area to come in and test to the long side, right? And then if we look to the left, there's nothing there, right? So that's all-time highs. So if we get above, the natural target, if we hold this, will be to come up and test 40.42. And if we consolidate, so here's the key. If we can, obviously it's going to be if we just open up and drive, right? No brainer, potential trend day up, unlikely on a Monday, but market doesn't care about the unlikely or likely, it just does what it wants, right? Usually we end up with some variation on balance, and my guess is balance will look something like this today, right? Or like this. That's how my guess is that we end up closing out the day, okay? So now let's go take a look at the same prospect from a 24-hour standpoint. Again, we have plenty of time, so there's no need to try to force or rush through it. Oh wait, I want to bring that back to show you something. 30-minute ADS, you can see that we're one-timing to the upside and that we can't break the last swing low, right? So here's the first consolidation point, second consolidation point, third consolidation point, right? Again, back at 36. If we can't get below that and you see the support resistance there on the backside, you can see we know for a fact there were sellers here, right? It's undisputed, hours and hours of sellers. These guys are going to want to cover quickly if they can on a backside test, especially if they're short components of the S&P 500 as opposed to the entire S&P 500, right? So next, let's move to a 24-hour, which I should have hidden right here. Okay, so on a 24-hour, you can see, again, there was an HVN from Friday. That was at 34.75, right? We opened up, we pushed underneath, we rejected, right? Then we got above and we drove. You'll see there's really nothing up above that's substantial. So the entire day is really going to hinge on the market's ability to hold above 34. So let's go look at it from another perspective now. Same exact chart. This time from a time perspective. Okay, we're going to go in the same order. ES.D. From a time perspective, our TPO point of control is right there between 28 and 26. Now this is a 24-hour. It's a little bit lower than the volume. It's a great example of how volume profile and time profile can differentiate, right? So even if we get past this 34 area this morning, excuse me, why am I missing that? What did I just say incorrect? I said something incorrect there. Let's go back for a second. 34, 39. Okay, I know why. So we're up here this morning, right? From a time standpoint, bears still can't get control unless we get below this 26.28. So my highest odds location, both due to stretch, right? Stretch and time spent, will be this 28.26 area. Bears don't have control. It's why the white zone's there last night. Sorry, I had to reorient myself. So this is my first test, right? This is where if I'm aggressive, I want to be long. This is my second area. Friday's high and Thursday's high is okay. It's Globex low, and given that buyers are in control, I would expect a response there. Okay, again, I don't want to take below zero. If we open drive lower and they are able to pull off the smash and grab onto the downside, that's fine, but I would expect a response in each of these areas this morning as opposed to the open drive lower that we've been experiencing, right? So this is my highest odds location, okay, and that gets reflected both in time and then on the upside, right? What do I have to get past? So here we are at that 36.34. These are my two key locations from a time. So now we have a volume perspective and we have a time perspective, and both the volume and the time are lining up together, right? Then lastly, and then we're going to jump over and look at NQ real quick, and then we'll be done. Let's go to the 24-hour. So from a 24-hour perspective, right, you can see that we've spent a lot of time here at this 36.35, and we spent a lot of time here at 37 to 39, right? So I don't pay much attention to the TPO from the overnight because you're going to have less volatility in more concentrated areas. What I'm really looking at is from the 24-hour perspective, that 35, 34, again, we spent a lot of time there from a 24-hour perspective, and I would expect a push down into this area to yield a nice trade to the upside underneath, and underneath and holding brings us back to the TPO for the 24-hour, again into this 26.28 area, below 26.28, and we actually have a pretty clear shot at retesting this double bottom low down at 16.15. That's been the trap point, and again, if we somehow, I won't know how they're going to pull that off today, but if we can retest this area, I expect to get a strong responsive buying out of that unit. That's 40 points below where we are. I don't know how they're going to manage it. ES never broke down when NQ did, and NQ's clearly caught in a short squeeze at this point. And realize that entire drive down could have been driven, right? What I want to know, the entire rollover in NQ could have been driven from an imbalance going into quad witching and traders getting caught the wrong way, and it could have simply been a synthetic move down. Because again, I reiterated through the weeks, no tech company missed earnings, right? No tech company lowered guidance, no major tech company, right? That entire thing could have been simply an imbalance to the buy side that had to get balanced out with a move to the downside to find buyers and to shake out the weak hands. And it could simply be completely over. So let's jump over to NQ really quick, which I've added the support resistance chart. From a day perspective, which is all I care about on NQ, right? Support is at 56.95 and a quarter to 56.76, right? The resistance point is at 57.58, right? Which we're at 57.37, right? So I'd expect at 57.58 to 57.83, right? If you want to get a little more perspective, but it's thin, so it overshoots, you can clamp that down a little bit and say 57.58 to 57.75. But buyers are in overall control. We're up 50. If we don't fill the gap on either one of those markets in the first hour, okay, I want everyone to hear this. If we don't fill the gap in the first hour, the odds are low that we will fill the gap today at all. Okay, and you want to be leaning to the long side. Okay, it doesn't mean it can't, won't, shouldn't. It just means the odds are low. Just like anything else, even if you have a 90% odds of a win rate of 90%, your very next trade only has a 50-50 chance of winning. You have to realize that. Hence, we need loss control, right? And we need the appropriate stop on whatever trade you take. So, if NQ doesn't fill the gap in the first hour, I would expect it to push. There's a ton of NQ shorts that have built up over the last 2 weeks. Those guys are going to be in really bad shape. If we get up and over this area, it's all poorly auctioned above. We have single areas to be aware of on NQ above if it gets out of control. Single prints into that 56.10 to 56.18, and then again this little area between 68.45 and 68.70, and then you're back into all-time highs again. Don't think NQ can't rip 100 to the up. Okay, it's very, very doable. I would not be wanting to fight NQ this morning unless I get a clear open drive lower, IB break of low, and a 50-60 back, clear setup. They had every chance in the world to break. We double bottomed here. They couldn't break that double bottom. And that's your bull bear line bigger picture right now. And it's your major trap point to the upside. But there's a lot of work to be done to get underneath. And that first push into that 5,700 to 5,676, this area should find responsive buyers. So again, I'll be charting NQ on a daily basis. I'm not going to be pointing out necessarily high odds entries or not. Everyone who wants a chart has the chart. And really, that's it. Let's just follow our trade plan. We're looking for tick pushes lower, negative 600 prints on tick, right? If we start moving up, those are going to be long location trades. Tick divergence to the downside. And remember, if the rotation all of a sudden dries up because we're going up again, this will be the first day that happens. And Mondays tend to be the narrowest range day. So allow yourself to let the market adjust for you, meaning today, if you're waiting for an 8 to 10 point rotation, if we don't fill that gap, you're probably not going to get it, and you're going to have to audible to about a 4 to 6 point rotation. And what's going to help us? The accompaniment of the tick to help us figure out tick, by the way, is plus 1,000. That does set us up for potential zero tick trade this morning. Again, I anticipate that someone's going to try and push that down. And best of luck. Did Globex high move, guys, or we still have 40 and a quarter? Let's get the opening prints down. Open 2440. How convenient is that? Everything's in the same little place. Okay, and on NQ we have open 57.35 and a quarter. Manchester and Globex high. Thank you, Bill. Okay. Again, I'm looking to zero tick to provide me with a potential trading opportunity. Again, if the first 5-minute low doesn't bust after it's established, potential trend day up, right? We usually don't get that on Monday, but anything's doable. Minimize this. And remember, if your goal is to grab those value area highs, you have some work to do, right? So far, no zero tick. Not surprising they're trying to push down, but at all. I think I'll stop the recording.